great future. We're talking real money.
It's really hard to figure out what something is worth. You hear a lot of people say, my house is worth $1 million, and then they go to put it on the market, and then you hear them say, well, I can't sell my house. Well, then maybe it's not worth $1 million. And this is something that's becoming a real problem among private funds as they try to determine what these things, this latest hot investment is worth. And we're going to
let's talk about what a private fund is first, but I know you want to say who we are and what we're doing here.
Exactly. I was going to get to that.
I know.
I was going to give you that opportunity as soon as if you just wait.
Please. Go right ahead. Oh, patience.
That was the message last hour.
I know, and which I never listened to 30 years ago, and I wish I had. So,
hi everyone. Welcome to Talking Real Money. I forgot what the name of the show was. I'm Don McDonald. Over there is Tom Cock, chomping at the bit to tell you what the heck a private fund is.
Yeah, these are made up of companies of assets that are not traded publicly versus publicly traded. Okay, so you can buy and sell Amazon any day, or Tesla, or Boeing, or Weyerhaeuser. I'm knocking some Northwest names off the Costco, Northwest. Anyway, you can every day the value of that company is determined by people that trade those equities, right? Those stocks. So
right.
We know what it's worth. That's what it's worth. And by the way, there still would people tell you, well, that's worth way more. No, it's not. That's because you can see what the people are willing to pay.
What something is worth is what someone else is willing to pay. And the problem becomes one of either well-meaning or evil intent obfuscation.
Yeah.
And that's one of the problems with private equity. These private real estate trusts, these private acquirers of businesses, of consumer credit, or whatever it might be, these things value their assets in ways that are certainly subject to being questioned. And
are being questioned the minute they actually get traded, right? I mean, not when just somebody down the hall is saying your company's worth $10 trillion, when you actually put it on the market and find out, well, the people that buy and sell these things say it's only worth $2 trillion.
Yeah.
It's happening more regularly. Let's put it that way.
And it doesn't, see, let's say for a minute that they're well-meaning, that we've got like this BlueRock Total Income Plus Real Estate Fund that
which holds other REITs, I'm assuming? Or is it okay.
Income, bonds, and REITs. It's private stuff. And they had it appraised, and some appraiser said, well, it's worth X. Like you got your house appraised, and some appraiser said it was worth X. But
which
then
doesn't mean anything.
You go to the market. You then say, okay, let's find out what people will actually pay for it. You go to the market, and it's worth a lot less. It's worth like Z.
Well, and in this case, the piece that we're referring to from the Wall Street Journal recently, it's worth less than Z. It's worth
this BlueRock
fund
went from $24 a share to just under $15 a square when it started trading on the New York Stock Exchange.
So more than it took a haircut of somewhere around 40%.
That's right. Yeah. What they thought expensive. It was worth. Versus what the market says, and remember, the market is not like six people sitting around with a calculator. The market is millions and millions, tens of millions, maybe hundreds of millions of people, all simultaneously trying to calculate values and making decisions in aggregate. It's called the wisdom of crowds. And it has been proven to be reasonably effective. Not 100%, but close.
And there's times when it's not what we would call efficient, right? I mean, Dr. Eugene Fama, who won a Nobel Prize, would say the markets are generally efficient.
Generally efficient. You have to qualify. They kind of
figure out what things are worth. Yeah, okay, they're not efficient every moment, certainly, and there's parts of the market that are inefficient, right? They're going to hear, well, if I trade emerging market small cap value stocks, which are not traded very much, I can take advantage of inefficiencies there. Maybe you can. But what we're trying to get to here is people are going to run around and tell you with some of these alternative, and that's what this is, an alternative investment, it's worth $10 trillion when the reality
based
is
on
when
our
people,
internal review.
We got a guy
of the
says
assets.
absolutely, yep. But then when you actually start trading it, it's only worth half of that. That's what we're finding out, and that is troubling. That's why we don't trust any of those numbers unless they are actually traded. Period.
And the thing I love about this, the wonderful irony of it, is that the pitch that these private equity funds have been making for years is that they're safer. They are less volatile than investing in the public markets because their price is stable and steady. Well, that's only because you don't know what the price is. They're telling you what it is. Now, if I tell you my house is worth $1 million and I come to you and say, would you give me $1 million for it? And you go, no, I'll give you 7.
Yeah. Well, and I think the real estate is a really good place to talk about this because everybody thinks their house basically is worth more than what somebody else is willing to pay. See it all the time.
The only real value is going to be when you put it out for sale, and then you'll know. That's it. It's that simple. 855-935-TALK is our number. Give us a call.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan, one that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
And while we do really enjoy sharing things that we discover, that we read, that we think, that we feel strongly about, we really do love defaulting to you. I mean, that's the best part of the show, is having an opportunity to talk with you, share ideas with you, answer your questions about money, try to point you in a better direction so that you enjoy a better future. That's really the whole point. 855-935-TALK is how you do that. You dial that number. You come to the show on Saturdays from 3 to 5 Eastern, noon to 2 Pacific time on Northwest News Radio in Seattle, and then it becomes a podcast on Tuesday and Wednesday this week.
Yeah. Wait, it's not going to be when? Are we going to do a Christmas Eve?
Yeah, this will be the
podcast?
Christmas Eve podcast.
And then
Merry
nothing
Christmas.
on Thursday.
Ho, 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 ho. No, nothing on Thursday.
And then what about Friday?
Friday has a Q&A.
26.
Friday has a Q&A.
Wow.
Yeah.
We're working. And then we'll be back here.
We'll be back
live,
here live
on Saturday.
Yeah.
Absolutely. 110.
And then
sure.
on the 3rd, we won't be live. We'll be pre-recorded because
be very unusual.
Gee, what will Tom be doing then?
I'll be out mowing my lawn. Make sure it's all ready for the
He's
spring.
He's going to spend a week mowing his lawn.
It's a big lawn.
Yeah,
a lot of hills.
855-935-TALK. Give us a call like Steve in Kentucky did. Hi, Steve. Welcome to the show.
Hey, guys. How's it going?
Good. Thanks, Steve.
Hey, I've got a quick question and possibly a comment, but I'll wait till you take my question before I screw it up with comment.
Because we might hang up on him before. No, I'm kidding.
Got a quick finger. It's the holidays.
Yeah, that is exactly my point. I listen to you guys all the time, and I try very hard to listen. So, my father passed away in August.
I'm sorry.
And I have an inherited IRA, and I also have some money in that inherited IRA that was in an annuity that he had. And I'm wondering if I am required to take the minimum distributions that he would have taken from it, or do I just need to clean it out within the 10-year period?
It is the latter. The 10-year period is for any inherited IRA, I think since 2022. I always forget when the rules went into place. But, yeah, so anything you've inherited now, there would be the 10-year rule. And if he had not taken a distribution in tax year 2025, you'll have to take one for that year as well.
Okay. Well, I got a voicemail from the institution that held the IRA saying that I would need to take a minimum distribution on the IRA, which I did, but I don't know if I have to take one on the inherited annuity also.
Well, is that in an IRA, or is that just a regular taxable type of? Is it inside of an IRA, individual retirement account?
Well, I do not know. However, whenever I had it transferred to Fidelity, it went into the inherited IRA, the BDA account.
Okay.
Then it's just one.
Yeah, then it's all the same. It's all going to fall under the exact same rules because it doesn't matter what the investment is. They're under that IRA wrapper, and so the 10-year rule applies to anything that is inside of that IRA account or any other IRA account.
Okay.
Correct. Yeah.
Well, I'm not terribly worried about the 10-year thing because I'm doing some tax planning and plan on getting that out within the 10-year period. The only thing was I didn't know if I would have. I know I had to take a distribution on the inherited IRA. I did not know if I had to take a distribution on the annuity.
You do. It's in the IRA, so you do.
If it's in the IRA, then it is. Yes, that's correct.
Okay. Bummer.
Sorry.
I was
sorry about that, and sorry certainly about your father. It's a difficult time during the holidays when you think about the loved ones we've lost, and yours is being so recent. So I'm very sorry for that.
Well, I appreciate it. My comment, so get ready on the hang up button, was I spoke with Tom a while back, and I'm trying very hard to follow his advice. I got about $1.5 million in my 401, and he had suggested looking for an investment that would, maybe a annuity that only invested in cryptocurrency, and I can't find one.
Okay, all right, funny guy. It must have been a different Tom, is all I can say, because let's see. There are two things there that Tom does not recommend nor use nor ever has.
Really? You don't recommend either of those?
Nope, neither. Annuity nor crypto.
I thought you were more daring than that.
Set the record. But options trading.
Boy, you had him going.
That, Steve.
You did.
Really
I'm watching his face, and he's going like, oh, my gosh, what did I say? Good job, Steve.
Mary. Well, yeah, that's funny. So...
Well, he must have kicked that one completely over top of the goal. So,
exactly.
Missed that one
from 5 yards out. Yeah, no problem.
Well, which he tends to do. He's he's a little old now for those shots on goal and
defeat from the jaws.
Thank you for a lovely Christmas present for me.
Yeah.
you made my day.
Last time I called in, you guys had referred to yourself as old guys, and I started my call that way. Hi, old guys, and seemed a little offended, so I didn't do that this time.
That's very kind of you. No,
with that Kentucky accent,
where's the line,
you can get away
by the
with
way?
Anything.
Yeah, because I'd like to go see some of your finer, the things from Kentucky here in the next few days is on my list. So.
Oh, those things.
Goes into the glass.
I think I got a bottle of one of those things under the tree.
That just warm me up on a cold
one of those
day.
Kentucky things under the tree?
Yeah,
I have
exactly.
a Kentucky thing.
I don't know. Those Kentucky things may have gone up quite a bit recently from what I understand.
That's okay. I'll pay top dollar for top shelf. There's no question.
Exactly. He will, too. I mean, look at where he goes on vacation. Thanks so much for the call, Steve. We appreciate it. Our phone number is 855-935-TALK. Lines are open for you right now. Come on. Give him your best shot.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
You know what? I love that AT&T commercial where they say, AT&T rock solid since 1876. Yeah, there were two phones. Two. In March of 1876, there were 2 phones. By the end of the year, what were there, like 3?
Yeah. Who was the first president of the United States to get a phone on the desk?
Oh, that's a good one.
I just read this. I was surprised.
With a phone. Grover Cleveland.
No.
Before
Herbert
Grover?
Hoover.
What?
Hoover. Yeah.
See, because the telephone, I mean, by 1880, there were like 50,000 telephones.
Apparently not.
So the president didn't get one.
1920-something, because he didn't get elected until 1928.
Man, that took a long time. Yeah. That really surprises me. I would have thought. Because by 1910, there were 2 million telephones. Wow, I was looking up my telephone facts.
Apparently not
the
one in the White
things I do
House.
during the breaks.
I know.
855-935-TALK. That's that phone number. Come on over. Spend the holidays with us, like Frank in Iowa has done. Hey, Frank, welcome to the show.
Yes, how are you gentlemen doing this afternoon?
Well, thank you, sir.
Okay. Okay, here's my question.
Yep.
I am 54 years old, and I'm looking at retiring here in about 2.5 years. My wife is going to retire in about 7 years. We both have workplace 401ks. Mine's traditional. Hers is Roth. We each have a Roth account, and we also have I have a traditional IRA that was a rollover. And all of our non-work funds and brokerage accounts are at Edward Jones. With American funds, probably about 12 American funds and 4 Vanguard ETFs. The more I've been listening to you guys, Paul Merriam and some others, I am looking at moving my Edward Jones to possibly Fidelity. Just checking to see what your thoughts are on moving to Fidelity. And yes, I did pay a load on the American funds. Would I consider that water under the bridge at this point? I am possibly looking after the transfer to going to a simpler 4 to 5 fund portfolio.
Yeah, I got to ask another question, though, too, because this just came up at a holiday party I was at earlier this week, where somebody said one of the funniest things I said this year was to somebody like you who called and said, I'm retiring in 2 years and my wife's working another 7. And they said, what should I do? I said, stay married, because there's an income that you wouldn't have got for the remaining. So that would be part one. The short answer is, here's the thing about American funds. Yes, you paid a load. Would it be better not to? Yeah.
Would it have been better not to have done so?
Thank you.
Yes, but it's now a sunk cost.
Yeah. But the average expense ratio on the American funds is, I don't know,
60 basis points or so.
60.6. Now you can go get, and I don't know why you go into Fidelity, but that's a whole other question. But you can buy funds at Fidelity for 1/10 of that cost.
Oh, yeah.
On the expense ratio.
Yes.
In other words, you can own those. So,
yes.
And you can get better diversification, and you can get indexes that cover more parts of the market.
American funds are all actively managed.
Yeah.
And that's why they have higher expense ratios than index type or rules-based funds. So we think that in a taxable account, it requires a bit of planning.
Yeah.
In an IRA, it doesn't matter. So, but
cake.
Moving from Ed Jones to Fidelity or any other low-cost, generally non-commissioned firm is a smart move in our book.
And are you going to do this on your own, or are you going to have an advisor at Fidelity?
I will probably do it on my own.
Okay.
The closest Fidelity office to me, because if I do it, I'd like to do it in person, is in Madison, Wisconsin, which isn't, it's maybe 3 hours drive for me.
Well, and you said you only wanted to do 4 different things. So, that's,
and I'd like to simple it down to 4 or 5 like ETFs.
Yeah.
Is what I'd like to
and
go
that's
with.
certainly something that's, in terms of the portfolio, that's manageable on an individual basis. There are other things that an advisor can bring to the table, but if we're just talking about portfolio structure and management, a 4 to 5 fund solution is easy for almost anybody to run.
And I'm going to add this as well. The fact, number one, we loved Madison. We were there a year and a half ago. We had a great visit. Just talked to somebody who was at our picnic recently, and then had a great conversation. The idea that you still can go see somebody in today, that's getting less. It used to be, by the way, we met with about 80% of our clients. Today, that has flipped completely. It's about 20% of the people that actually come and see us anymore. We do this all by Zoom, online, et cetera, et cetera. So I wouldn't base my decision on that. I could see how it might be important, but that's not how I would decide on my advisor in the future.
Yeah. But doing it on your own, It's great. Again, down the road, complexities in life may require an advisor, but at this point, you're making a very smart move, we believe. 855-935-TALK is our phone number. Again, lines are open. We'd love to talk to you.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Keep forgetting to turn the heat on in here.
Oh, yeah. Oh, my gosh. Yes, it's freezing here. It's like 78 degrees.
I looked this morning when we talked about this. We do this. I do my part of the program from our the auxiliary dwelling unit next to my house. I turned down the heat because I don't like to keep the place warm and nobody's in here. But then I forget I come in every Saturday. I came in today, it was 47.
Ooh, bro.
So I turned it up to 50 something. So keeps you moving.
Yeah,
so anyway.
got to keep moving. Hey, give us a call. 855-935-TALK on our little holiday get-together. Not that we're doing anything special. We're just doing what we do. There's an article Tom brought to my attention, and it's from Morningstar. And I sometimes feel like these guys write up articles because they feel like they are supposed to be writing up articles.
You got to do a certain number of words by Friday.
A certain number of articles have to be put out. And this one is entitled, and I think it's badly titled, okay? It's entitled The Best and Worst New ETFs of 2025. And I think they could have taken 3 words out and had a much more accurate title, and it would just be, or 2 words, The Worst New ETFs of 2025.
Yeah, I didn't like any of them.
Because the reality is, any new ETF is basically a waste of time.
Well, that's the point. I mean, what needs to be added? But could you believe the opening here? How many ETFs, exchange traded funds, were added in 2020 this year?
Yeah, 1,000.
1,000. I mean, guess why? Because you're moving money from mutual funds into ETFs. They figured that out, and they're like, oh, well, we'll just start one of those.
And over almost 25% of those, or over 20%, were leveraged equity funds.
27% of new ETFs built their strategy around a single stock and added leverage.
Yeah. Oh, it's crazy.
More than 1 out of 4. I mean, it's just 92% do not track an index. Half of them were strategies that track single stocks, derivative income, defined outcomes, or digital assets. These are not things you need. In fact, what we just said at the beginning is the most important thing. I don't think there's anything here that you need. You might want it because you're like, that's really sexy. I want to own that. But
well, I mean, for example, let me just give you some of the best. Okay, the best. This is what Morningstar, and this is why I take Morningstar with a huge grain of salt. And I don't even want to recommend it to most people because Morningstar feels like they've got to give equal time to actively manage things. And their 2 best were the Vanguard High Yield Active ETF bond fund, actively managed.
And Vanguard's had a high yield index.
They got a high yield index
mutual fund for decades.
Yeah. But do they need an active? Oh, no. iShares S&P 500 X the S&P 100. So
you can explain what that means.
It means they don't have the 100 biggest stocks in the S&P 500 in this S&P 400, basically.
Which is a bet. That's the dogs of the Dow thing, like buy the ones that haven't done as well because they're going to do better.
And then they give an honorable mention to Poland-focused growth. Really?
Lech Wałęsa make you proud with that one.
Harbor Mid-Cap Core. I didn't even know Harbor was getting into ETFs, but apparently
pretty much even Barron's getting into ETFs now because they've seen where the train's leaving the station. You better get on board.
And Brown Advisory Sustainable Growth.
Which didn't all that go away? The sustainable thing, and you could still buy them. It just hasn't. It was a big deal 5 years ago.
I really do hate the fact that Morningstar suggests these. For example, the Brown Advisory Sustainable Growth Fund has an expense ratio of, you're going to love this. Now, this is an ETF. They're supposed to be a lot less expensive,
right? That's what people believe, right?
Right, that's what they believe. You ready?
Yeah.
0.61. The Poland
and let me guess, it owns large cap stocks of some kind. You could go buy.
Poland focused growth is half a percentage point.
Wait, so does that actually invest in the Polish market?
No, Poland, Polen. That's the manager.
Oh, okay. You had me go.
Not Poland.
You didn't even stop me when I said Poland. I thought you'd correct me then.
Not Poland, but Poland.
Not the country.
But I saved the best for last.
Oh, please.
Harbor funds. They're mid-cap core ETF.
Yeah.
Which, by the way, has a portfolio of a whopping, talk about actively managed, a whopping 60 stocks in the portfolio. They're working really hard. It's an ETF.
And this is how much they're charging you a year, folks.
0.88.
Yeah, and
for an ETF.
I think people believe, well, I own an ETF, so I'm paying less.
And Morningstar puts these in their honorable mention. These are some of the best.
Yeah.
I think that's horribly irresponsible of Morningstar, because then nowhere do they say, oh, and by the way, these are flippin' expensive. Now, I didn't
see they added Avantis in there.
I didn't look at their worst.
That goes way back, actually.
Let's see what
I see best and worst since 2015 is Avantis. Okay.
TXX.
Can I say Avantis again? Because it was the word we said the most so far in 2025, according to, if you believe.
Oh, my God. You know what TXXD is? Okay, wait, first, here's the name of it. TXXD.
I'm not going to know.
21 shares, 2X long Dogecoin.
What?
It's an ETF that invests in an imaginary cryptocurrency.
How long has that been around?
It invests in a joke cryptocurrency. Well, no, it just came out in 2025.
So it has no track record yet.
Well, no, it just came out in 2025. And what would its expense ratio be?
0.73.
Oh, you're not even close.
No? Okay. I told you I wouldn't know.
1.9.
So 2%.
2% a year.
Yeah.
2% a year.
You know, and if you want to do that.
It has a portfolio of literally nothing. I mean, really, it's kind of like a gassy dog.
Yeah. I can come home for that. I don't need to go there. This is really bad, and this is why you don't need the new stuff. Everybody thinks they do, but you don't.
855-935-TALK. That's our number.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Oh, and don't forget, this holiday season, since we're in the midst of the holiday season, check out my newly incredibly popular
Seasons Readings
podcast, where I read. There are almost 20 stories that I read to you at Seasons Readings. So
good ratings, good stories. And by the way, if I could just ask one thing, Mr. McDonald, please.
Yes.
Another lump of coal? I mean, that's all.
You need that in the little room you're in right now.
Set this on fire or something.
And by the way, if you listen to my stories and you like them, please just rate it 5 stars. Yeah. There's a couple of. I have now 2.
Why?
Why
would you have a negative? What would be a reason they didn't like that?
3 1-star ratings. No
For
reviews.
What reason?
I don't know why. Is somebody mad at me about something?
Haters are going to hate.
Maybe
I
it's
guess,
Bitcoin Bob or something. But
he's looking everywhere. For
2 stars, 2 3 stars, 2 4 stars, and like 19 5 stars. But still, what is the 1-star thing? I don't get it. So
silly.
Rate them if you could. If you like them, don't rate them if you don't like them. Just don't.
Good. I like them.
Thank you. 855-935-TALK is our phone number. 855-935-8255. Oh, what fun it is to talk on Talking Real Money over the holidays. Anyway, let's go to Everett. That's in Washington, where Ernest resides. Hello, Ernest. Welcome to our program.
Yes, how are you doing? Thank you. First-time caller.
Thank you.
Yes, I am thinking about retiring next year. I'll be 69. I work at Boeing, and I want to thinking about transferring my VIP. Looking for help to do that.
Okay.
Because they're only limited to just a certain amount of funds you can contribute to.
Right.
Yeah, the Boeing. I don't think they call it the VIP anymore. That's old school. But
well, he's older school like us. He's like
69.
He's in our school.
Yeah, I'm in an older school.
Yeah.
I'm actually, just to set the record straight, I'm from the school that they built before the old school burned down. So I'm going way back. So anyway, there's a whole other thing to that. But yeah, so
pay no attention to him.
Yeah,
please.
exactly. So
Please don't react.
So are you going to do this on your?
Both you guys, you guys are funny. I pay attention to you every Saturday.
Thank you for that. So are you going to go, Ernest? You're going to go take care of this yourself, or are you going to hire somebody to do this for you?
No, I was thinking of hiring you guys to do it. 'Cause I know you guys have talked about, having stocks, international stocks and all that stuff, and that's what I want to do and stuff like that. 'Cause I know nothing about what to invest in.
Yeah, and that one of the things is you can get by with a 401k because it has limited choices and it's pretty easy to make decent choices. But when you get closer to retirement, not only do you have the complication of building the right kind of portfolio for both your future needs and your ability to stand risk, you also have to create a portfolio with your situation in mind, your estate situation, your tax situation.
Income.
And that's why we believe it's so smart to have a 100% fiduciary advisor. Now, there are a number of good ones, not as many as we'd like, but there are a number of good ones in the Seattle area, and we believe that we're among that group, and I think our clients would agree that we're one of the better ones. So, if you wanted to come down and meet with one of our advisors, of course we'd want you to do that, but we would suggest that you meet with one of our advisors first before you make that decision so that you can talk with them, get to see what kind of ideas they have, what the costs are going to be, all of those things that we will disclose to you that a lot of people won't, and that we think it's important that you know.
And it's easy to do that. You just go to talkingrealmoney.com, click on...
And set up a meeting. Click on Meet an Advisor.
Meet an advisor.
Okay.
So easy.
Sounds like a plan to me. I want to.
Yeah, no, we'd
and
love
I already know that, Yeah, because I can. Now, what I'm not sure of is I had a friend of mine, so I'm not sure how much he knows. He said that I could transfer my money out of there now since I'm over 60.
Yeah, you can. Actually, 59 and a half, you could do that at Boeing. You could do what's called an in-service distribution. So, but don't do that on your own because I wouldn't want you to mess it up and end up owing a bunch of taxes. And I would use a professional for that. So, yes.
you want a professional no matter who it is, but you want to avoid those that are truly not 100% fiduciaries.
Run into it all the time.
And so, yes, we think it would be a good idea for you to set up a meeting with us or another of those fiduciary advisors. We even list some at our website. We're not saying we're the be-all and end-all, but we've got very good people who do really good jobs. And the fun part about meeting with one of our advisors is if you go, "Where's Tom?" They'll go get him.
Yeah. Yeah, I know. So... Yeah, but I want to do that now and stuff like that instead of waiting to have a headache of retiring and then trying to do all that stuff while I'm
You're a
now,
smart man to start early.
Yeah, I agree. And congratulations on your upcoming retirement.
Maybe.
Yeah.
We hope it's good for you.
Yeah, well, it's going to be a different thing. So, but I'm kind of looking forward to it. Kind of afraid to jump into it, but you're going to know until you do it. So.
Well, we'll help you as much as we can. We will truly help you as much as we can.
TalkingRealMoney.com. Click on Meet an Advisor. That easy.
Okay, I will do that.
All right. Thanks for listening and thanks for joining us. And have a great Christmas.
Yeah. Merry, and Happy New Year.
And a
happy holidays. I like what you did on the podcast yesterday. You tried to go through all. You forgot Kwanzaa, though. You tried to go through all of them.
I forgot Kwanzaa.
You did. I was driving along thinking, oh, my gosh, you forgot Kwanzaa. We're going to be in big trouble because people are so serious. People have gotten mad at us for so many things lately. So many. And we're trying to have fun.
It's funny. I watched a Mad Men episode last night where this comedian makes fun of this overweight woman.
He was mean.
You know what you need to do? You need to get a thicker skin. Or she said, I don't have the stomach for it. And he was like,
he's
trying not to
biting his head.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
For your real life and real future, Tom and Don are talking real money.
And if you're listening to the podcast on Christmas Eve, 'twas the night before Christmas, when all through the house not a creature was stirring, not even a mouse. The stockings were hung by the chimney with care in hopes that St. Nicholas soon would be there. Did that come through?
The beginning was a little muffled by the music, but at the end we heard your mellifluous tones very easily.
That's one of the many stories there at Seasons Readings.
Take advantage.
'Tis the season.
Exactly.
For the readings.
The gift that keeps on giving. So there you go.
Yeah, it's funny. I did this. I have another podcast called Lit Reading, which is just general short stories, classic short stories.
Also entertaining. Yeah.
I had done these Christmas stories as part of that, and I came up with the idea the other day. About a month and a half ago. I said maybe I should come up with create just a seasonal podcast, and I submitted it to Apple, and it was like Apple featured it.
I know,
and I went from like 100 listeners to I think it's had 19,000 listens in just the last 2 weeks.
And what's going to be the seasonal podcast in the new year?
There won't be
like resolutions or weight loss.
No, there won't be one. The only other seasonal one I have is going to be called Frightly.
That doesn't work in January. What does that
that's going to be
January?
for October. I have nothing for January. There is no holiday.
February?
No February. Yes.
March?
It's all stories about presidents in February.
Because it's President's Day.
No, we could do Valentine's Day. I could do one of those. Oh, that's actually an idea.
Thank you.
I may do that.
Love stories. Yeah, perfect.
Oh, Tom, you had an idea.
Finally,
let's memorialize.
I have lots of ideas, but they're not good.
And I think it's time to put you on the little raft and to shoot you out into the lake with the.
I'm going out on Christmas Day. Going out Christmas Day on the.
You're going out on the
kayaks.
Lake?
Yeah, we're going to put our Santa hats on and go kayak around morning. I'm not going in that water though. Well, if I do, then you'll be alone next week.
Yeah. We want to truly, whether you're listening to this on Saturday or Wednesday or any other day, we want to wish you a terrific holiday season and we appreciate you so much. Without you, we would not be doing this for as many years as we've been doing it.
No, that's for sure.
We really appreciate you and wish you and your family absolute comfort and joy, because that's really what this show's about. It's about using money to find comfort and joy.
And it's not about getting rich. It's about having enough to take care of yourself and your family. I think that's
being comfortable and enjoying the rest of your life.
Yeah.
I just thought of that. Comfort and joy.
And silver and gold. No, kidding.
No, we don't want you to invest in silver or gold. Sorry.
I was thinking Burl Ives.
Sorry, Burl Ives. And if you have a question, we love helping you get answers. And you can send us questions anytime, day or night, at TalkingRealMoney.com on the contact form. You can type them to Tom or speak them into a microphone to me, and we'll get those answered on future podcasts. And if you feel like you could stand a second opinion on your money, coming up on the end of the year particularly, you're going, should I rebalance?
Talked to a lot of you here in the last few weeks. Yep.
Yeah, coming up on a new year, it's probably a good time to meet with a truly 100% fiduciary advisor, and it's great if you could do that for free. If somebody would do it for free and they wouldn't try to pressure you into becoming a client, and that's just what we do at TalkingRealMoney.com. Just click Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.